Hello everybody and welcome to this video. Today is September 11, 2017 and you are seeing the crude oil futures market from the ProSuite software. Today was a down day compared with Friday, but we're going to look at what was the condition of the market when we opened this morning. First of all, we were facing a two-day breakout. I'm going to bring the day chart here. So you remember that on Friday we were facing a balance area, 2 days balance area. So we broke on the way down. So that was the condition of the daily chart. A bear breakout from balance area. And the Friday's profile, which is this profile here that I will split, full split right now. That was Friday's profile. So it was marked by very low volume, 16.3 million share for the USO ETF, which was lower than the Thursday profile. So this is typical of long liquidation, low volume. The market was long, short-term inventory was long here at the top, and we corrected this inventory on the way down for Friday. The POC migrated down, but you see the late move on Friday. Probably the market was at that time a little bit too short. Now I'm going to add the overnight market right now to the picture. That was the picture here. So we closed here at that level on Friday. So all the activities was up. So usually we would consider overnight inventory as being long. But I will show you here how I came to the conclusion that the overnight inventory was short. And I'm going to bring into the picture another chart. And this is the time value map software, another product that here at Coder for Trader we offer. And these are profiles, but not based on time. A new profile is created when we have a breakout of the last 9 bar, which is the rule for creating a new profile. Each profile must have at least 12 bars. So this is really how Peter Stoudemire has evolved. This is the last product that he has created because he said that market has changed, and now this kind of profile is better suited for the kind of market that we are facing today. I'm using that as a complement, to my market profile analysis. And you can see here that at the bottom, these are the time that we created new profile. So you see that the overnight market here is right here in these two profiles in the middle. At 8:30 yesterday, Sunday night, we broke on the upside, and I think that here created the bullish profile, which was showing long inventory. But at 3:30, and I think it is when London is opening, you saw that the market broke down, and we created another profile down here. So that's why I think that these guys that were long overnight, they covered, and the net position for the overnight market this morning when we opened was short because of that here. It doesn't mean necessarily, it's not because all the activity took place above the previous day profile that it is automatically being considered as long inventory. You have to use your judgment on this, and you have to look at the activity that took place in the overnight market, and that's why the time value map chart is helping me in finding what could be the end result for the overnight inventory. And I came to the conclusion that the overnight inventory was short this morning. So we had the short-term inventory short from Friday, and we had also the overnight inventory short. And we open inside the range of Friday. That was the situation that we were facing at the open. The open is right here. And we traded immediately down. Like I mentioned in my blog, I made a few mistakes today. That was not a good trading day for me. It happens, and this is when you make these kinds of mistakes that you can learn something. It's always good to learn something from errors that we're making. It's as simple as that. And when we opened this morning, because I considered this overnight inventory as being short, and I think that maybe the market, I'm going to split Friday's market again, because the POC here just was staying there, and we had this late move on Friday. I thought also that maybe we had a too short situation coming from the short-term inventory. So I was prepared, to go against these inventory, but that was wrong, like I mentioned in the blog, and I'll tell you why. First of all, I had two horizontal line, two levels that I was watching when we opened, and that was one of these lines. The other line was right here, right there. Okay, so you see we have a single print here in between these lines, because this is the high of the late distribution on the downside here, and this is the bottom of this middle distribution we had on Friday. So re-entering that range here was considered as significant for me, and staying below that line was also considered as being significant for me. And not only that, but this line is also the high of the J period on Friday. So when we opened this morning, we opened inside the Friday's profile and right at the top of the J period here, which was a good opportunity to sell because we were still in the same mood as we left on Friday afternoon. That was a good situation to short. That's why, the inventory condition has always been to be taken in consideration of the whole context of the market. You cannot just think about one thing. You have to look at the whole picture always. If not, you're gonna get lost. You're gonna miss a lot of nuances, very good information about the potential direction of the market. And that was my mistake. I had a preconceived idea this morning. I was ready to buy instead of selling. I had only one scenario in my head, and that's not good. And the market shown immediately that it was to be to trade down from that J high level period here, and nothing has really changed compared with Friday. So that was, we were in a bearish mood when we closed on Friday, and the market traded down, down, down. And what happened at that time? So that we had all three inventories very short here at the bottom. We had the short term, the overnight, and now the day trader got short here in A, B, and C. So that was problematic, especially when we saw the weak structure on Friday. Low volume and long liquidation sell-off, which was considered as a weak structure at the open. So everything was in place here for a possible short covering rally, and this is what we saw. In D period, when we opened in D, we didn't make a new low. And by the way, we left the polo, which was another clue that maybe the market was now getting really too short. And when we traded above C high and the POC level here, obviously it just triggered a lot of short covering. And that's what we saw, especially in D and F period, where everybody wanted to get out at the same time. So we saw the short covering rally, and I think that some short-term trader also went long on this up move, and probably this move down at the end here was a long liquidation by day traders, something like that. Anyway, the market finished with a long short-term inventory, and you see that the POC migration has migrated up all day long. So it's not really necessarily, a too long position, but it is anyhow a very long position now for the short-term inventory. So that was the day today. It was really a very tough day to trade. I must admit, I did not make money. I had the preconceived idea at the open, and not only that, but when we broke on this short covering rally, I even tried to sell there because I was influenced by the early bear mood of the market, sorry. And obviously, that was a big mistake, because the second lesson to be learned today is that you never know when a short covering rally or a long liquidation sell-off will end. You cannot stand in front of that. You need consideration. And when you see a big move like that, a big short covering rally, now it changes, the trader's mind. Now people are looking to buy this market because they see the market is going up. They do not want to miss the next big trend on the upside, and they just jump on the market, and it changed the tone. And so that was another big mistake I made today. So, but like I said, we are learning from our mistakes. This is when we are learning the most. So that was the lessons today. That was a very interesting market to trade anyway, even if it was difficult. Trading is just very challenging for everybody, and that's what makes it so interesting. So thank you very much for watching this video, and see you next time.